Good afternoon, Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Anaconda Mining. Anaconda trades on the TSX as ANX, Alpha Nevada X-Ray, and as ANXGF, Alpha Nevada X-Ray Golf Foxtrot on the QX. So more easily tradable for the Americans in the audience. We hope you enjoyed today's program. It will be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel, or email them in, and we'll ask them in real time and incorporate them into the Amvest line of questions. This webinar replay will be available in about an hour after the end at amvestcapital.com/webinars. If it doesn't work, just give it more time. It has to process. Amvest is a New York-based specialist investment bank and investment management corporate finance firm focused solely on the natural resource sector. This call is for informational purposes only. Very pleased to have with us two people from Anaconda. Kevin, making you presenter. Just pull up your screen, and gentlemen, turn on your webcams. Kevin's an engineer by background and was instrumental in the growth of Verte resources that ultimately resulted in a sale to B2 Gold in 2013. 30 years plus experience in the industry, all levels and senior levels, mining, exploration, development, operations, capital markets. Was recently CEO of Mako Mining and currently is a director of B2. Also worked for Kirkland Lake and IAMGOLD. Rob Dufour, the CFO, most recently CFO of Newmarket Gold, TSX listed mid-tier Australian gold producer, and was also the involved with some of its predecessor companies, Crocodile and Northgate, and until it was bought by Orico. So anyway, again, we'll be asking questions of everybody, and we ask everyone to ask questions, and we look forward to getting them. Just send them in the chat function there if you can figure that out, or email it. So gentlemen, you've got the floor, and I'm gonna turn off.
Thanks very much, Campbell. Happy to be here, and thanks for the invite. Anaconda Mining is quite a unique junior company in the fact that it has production, which creates cash flow for us to drive our growth, our aggressive growth through exploration and development. And this presentation that we're going through, currently on your screen, hopefully, is also on our website, so you can read the forward-looking statements at your leisure. We are in Atlantic Canada, Eastern Canada. Our production, which is limited production between 18 and 19,000 ounces a year of gold, comes from our Point Rousse project in Newfoundland. We look for a bright future in that mine with exploration assets in the Tilt Cove project just to the east of our infrastructure, which is very valuable to us to be able to leverage off. News lately, very important news for us, has been a significant increase in our resources in Nova Scotia, and we'll take you through the Goldboro Gold Project on that note. Again, 100% ownership of the Point Rousse project, producing 18 to 19,000 ounces a year. The Goldboro Gold Project in Nova Scotia, which is a development project, currently the largest, by far, the largest gold deposit in the province, second largest gold deposit in the Maritimes, and the highest grade undeveloped open pitable deposit in the Maritimes as well. Take you through that. And also we have 100% interest in a large land package surrounding a past producing mine that produced at 10 grams per ton, where we're looking for duplicates to send to our mill in Point Rousse. We have an experienced mining and financial team. We were just introduced by Campbell, and we appreciate that. I'll turn it over to Rob Dufour, our CFO, to take you through the corporate structure and some of the metrics of our operating mine. You're on mute.
Thanks, Kevin. As Campbell mentioned, we do trade on both the big board. Can you hear me now?
Seems like we've got an audio stuck.
I'm not on mute. You can't hear me?
I can hear you. It's just a little distortion. Kevin, do we hear you? Okay.
Yeah, can you hear me okay?
It could be Rob's connection.
Can you hear me now?
Okay, you guys have both come in, I guess. Anyway.
Okay, go ahead.
Yeah, I think Rob's connection's a bit slow.
Yeah, we've got a seriously long delay, Rob, so I'll just keep going. So we trade on the.
Okay, you can hear me now. We do trade on the TSX and the OTCQX.
Yeah, Kevin, just keep going and he'll reboot.
Yeah, okay, so we trade on the TSX and the QX, as was stated earlier. We've got 160 million shares outstanding. We have options, about 5.9 million options and 5.6 million warrants, which are all significantly in the money and will be a form of financing going forward. Our current market capitalization is about 130 million. That's Canadian dollars. Everything on this sheet is Canadian dollars. We have a cash position of 14.6 million, which has just been enhanced with the exercise of several million warrants. We've added another couple of $1 million to that, and our shareholdings are growing in institutions. Used to be quite a retail story, but since our last press release about the resources at Goldboro, the institutional ownership is growing as we speak. So Point Rousse operations, last year was a record year for us, although it's small. I'll turn it back over to Rob. Maybe we can hear him now.
I'll give it one try. If you can't hear me right away, I'll step off.
Perfect.
You're good. You're good.
Okay, great. So as Kevin mentioned earlier, you know, Anaconda was Point Rousse for a long time, and that was it. On a standalone basis, not a big production profile, but it's extremely critical as part of a growth strategy. So last year we did 18,200 ounces of production. In itself, not large, but that generated operating cash flow of Canadian $14 million. And that's after corporate overhead, that's after corporate costs, and that's dollars that we can put into growth directly. So this year we'll do similar, 18 to 19,000 ounces of gold. Operating cash costs should be around US $11.25. And all-in sustaining cash costs will be around US $14.50. And a lot of that sustaining capital that we're spending in 2021 will support us into 2022 as well, production. And it is a unique kind of junior because usually you don't have development and exploration and production, but what we have all three, and therefore you get this leverage to a gold price. So we do our reserves at Canadian dollar, $1,900 gold. Yep, gold has come off, but we're still selling well beyond that. And this project is, you know, is robust even at gold prices below that. So what that effectively means is we can keep pursuing growth. We don't have to go and issue discounted stock every 9 months to keep the company going. And that's really powerful when you have a great growth development project like Goldboro, because we can now move this forward without diluting shareholders. I'll turn it back to Kevin.
So moving from Newfoundland to Nova Scotia, our development project, which is getting larger and larger, and now is the new news for the company, and it really is a good future for us. We're located in southeast Nova Scotia. It's a series of anticlinal maguma systems, they call them. They're basically rolled over folds that flow through the southern part of the province of Nova Scotia. There's 4 of them that are owned by Atlantic Gold. One of them was put into production called Tues by Atlantic Gold, and St. Barbara out of Australia purchased Atlantic Gold for $720 million 2 years ago. We're at the eastern end of the series of these deposits, and by far are the largest single deposit in the province now. We're up to 2.7 million ounces in all categories, far beyond any other deposit, and it continuing to grow. We are going to be completing a definitive feasibility study by the end of the year, and that'll really show the true value. But we've also decided to do a preliminary economic assessment next quarter to put some numbers around this new resource that we have. We have 11.8 million tons of ore at 2.86 grams per ton within constrained open pits. And it's important to note that these pits are constrained with realistic numbers, realistic gold price, realistic costs, and constrained only to the measured and indicated categories and do not include inferred. So even though it's a very large resource at almost 1.1 million ounces of open pittable material, there is still a lot of room to put more into the current pits. And then there's another 1.7 million ounces that have underground potential above and beyond a rather long mine life. You can see that the two pits are split by a lake and a river. Otherwise, we would have an open pit that's over 2 kilometers long or over 1.5 miles long. Fairly large project. We used a cutoff grade of 0.44 grams per ton to constrain our whittle pits to measured and indicated resources to get the close to 1.1 million ounces of open pit mineable material. What incidentally falls within the pits when you do this process is some inferred. We're currently upgrading that inferred, and our ratio for conversion into measured and indicated is somewhere between 60 and 80%. So we plan to add another 50 or 60,000 ounces within the current pit outline. That leaves another 1.6 million ounces outside of what's constrained within the open pits. Quite a remarkable deposit so far. This is a slide that tells 1,000 stories. The pit on the top left corner of this slide is the western pit long section. It goes down about 250 meters deep, about almost 1,000 feet, and then the eastern pit is about 200 meters deep. As you recall, split by the lake and the river in between. That does not in no way sterilize mineralization, does not in any way sterilize this mineralization in between. It just means that we, at some point later in the mine life of the open pit mine life, would come off of the open pits with ramps to get that via underground techniques. I'd like to also point out that the western end of the west pit is also a physical boundary. There's a buried natural gas pipeline here that we can mine to within 60 meters of on either side, but cannot mine through it. And if you trace the strike direction of this mineralization to the west of the pipeline, you can go for 1.5 kilometers until you hit a past producing mine called Dolliver Mountain. And we know that the limited information we have in between suggests that the mineralization continues. So there is opportunity for even another pit of this size. So this is a project that's approaching 3 million ounces, but has significant opportunity to the west of the current pits. Another thing is in constraining, being very, very conservative and constraining this mineralization to measured and indicated only means that there's some inferred, such as the cross section of the eastern pit on the right side of this map that is not within the pit yet, simply because of drill density. With further drilling, this pit to the east will no longer look like a hockey stick. It'll round out, and there'll be more ounces within the pit. So we've only started. There's a lot of room for growth here. There's a lot of room for immediate growth in and around the current pits. And because of moving our open pittable resource by over 1,300%, growing it, we felt that we need to put some economic numbers around this. So even though we're doing a definitive feasibility study by the end of the year, we're also doing a parallel PEA based on the new resource right away, which will be out next quarter. So our next steps are to continue infill drilling, to continue on our definitive feasibility study, which includes a lot of work on baseline studies, environmental studies to work towards permits. We will hand in a definitive feasibility study at the end of this year, and at or about the same time, we'll submit our environmental assessment registration document, which starts the permitting process for final permits to start building. And that process takes anywhere between 6 and 18 months. So by mid-2023, we should be shovel ready. So it's looking like this will be the next robust mine in Atlantic Canada. It'll be the highest grade open pit It'll be the second largest deposit, but still growing. So we're quite excited about Goldboro moving forward. As far as back to Newfoundland and our operation, we have been mining for 10 years. We have great leverage because of experience, and we keep mining at Point Rousse, which generates the cash to continue with our aggressive growth. And one of those growth opportunities is looking at the Tilt Cove project, as you can see on this map, which is about 40 kilometers east with quality roads of our current assets. And our current assets include that very valuable hole in the middle of this map, which is the exhausted original open pit at our operations in Newfoundland, which has now been fully converted and fully permitted into a tailings facility, an in-pit tailings facility. You cannot get anything environmentally friendlier with no dams to build, solid walls, and 10 years of capacity at full throughput rates of this Pine Cove Mill, which runs at 1,350 tons a day. So anything we find, we don't have to build new infrastructure as far as a process plant or tailings facility, and therefore we have a leverage. This is the only producing gold mill on the island. It's located in the west of this map. Pine Cove Project is the tailings and the mill. We are currently mining from Argyle, which Rob touched on earlier in a delayed voice. And then Stoggertite is something we've mined in the past, but we've just found the extension to Stoggertite, and the original drilling on that extension has shown some very, very exciting numbers, very near to surface. And we've continued to drill this off, and we truly believe that this will be the next mine after Argyle to keep the mine life going at Point Rousse, and hopefully keep it going long enough to explore on the exciting Tilt Cove project 40 kilometers to the east, to find something similar to the past producing Nugget Pond, which produced at 10 grams per ton. We have acquired through staking and through option agreements about 45 kilometers of strike length. This has been even extended further now, of the banded iron formation that hosted the Nugget Pond Mine, which you can see in the lower third of this map. It's in a banded iron formation, as shown in this third picture here. Stands out very, very clearly on geophysics, and therefore we can trace it through the entire concession holding. The Nugget Pond was formed by cross-cutting structures carrying mineralized fluids, which deposited out the gold when it hit the banded iron. We're looking for duplicates of that, and every single mine in Newfoundland was found with ground geochemistry, gold in soils and gold in tills. And you can see quite clearly around the Nugget Pond Mine, you've got this anomaly in the hashed red to the northeast, to the northwest and the southeast of Nugget Pond Mine. And we have similar geochemical anomalies along strike on both sides of the banded iron formation, representing the potential to have other deposits of cross-cutting structures that have deposited the mineral fluids. So we are knocking them off one by one. We've got a multitude of targets, and we're currently making money, like Rob said, making good money at 1.5 grams at Point Rousse. Imagine sending 5 to 10 grams like the Nugget Pond through the same mill, 5 times the revenue and a significant increase in throughput. So this is very exciting for us. One of the targets we just finished drilling was the Growler Target. The Nugget Pond past producing mine is about 1 kilometer off the map here, and this is a new discovery for us. It wasn't mapped as a Nugget Pond formation in the past. It is now mapped by us. We took grab samples, channel samples, chip samples. You can see the mineralized staining where we took our channel samples. We've just finished an 8-hole drill program here, and we'll be waiting another 4 to 6 weeks for assay results. So remember, a hit anywhere in Tilt Cove can be quickly moved towards permitting of just a mine, not a tailings facility or a mill. And it doesn't need to be as large as a standalone operation for anybody else would have to be, because we're leveraging off the assets that we have. So, you know, that's the quick. I wanted to leave. I wanted to do it in 25 minutes or 20 minutes and leave time for a lot of questions and try and answer everybody's questions. But basically, the investment takeaways here are we have cash on hand, we have cash flow, we have the potential for significant discovery in Tilt Cove, and we have a development project that is becoming quite robust, and we'll be stepping over those hurdles of PEAs and feasibility studies and permitting over the next little while. And this puts us on track to meet our objectives of changing what we were into a 100 plus or 150,000 ounce a year gold producer. So the current valuation at 125, 130 million Canadian really doesn't represent the value of the sum of the pieces. So turn it back and hopefully see if we have some questions that we can answer.
Sure. PEA out second quarter, is that right? And do you think it will be published more in April than June?
It'll be late May to June. We finish the work on it and announce the results, and then the report will follow 45 days later.
PEA out in Q2. Excuse me. Will the inferred resource in the current pit outline be converted in the M&I and the PEA?
The current inferred resources is what we're drilling that lie within the constrained pit. The resources that could fall into the pit on the northern limb of the east pit will possibly be done in time, but it's not a guarantee.
Going to the Goldboro updated mineral resource, how has your open pit footprint changed? What are your next steps? Do you expect a further open pit constrained resource increase in the near future?
The way we were looking at this project before the new resource was a starter pit that lasted anywhere from 1.5 to 2.5 years. It was about 400 meters long. The current pit is 2.1 kilometers long. This is a material change and a very positive change for us. The second part of the question is no, what we have now, plus the conversion of the 90,000 ounces, which will probably give us 50 or 60 measured and indicated, are what's going to be used in the feasibility study. Having said that, there's another couple of million ounces or a couple of $1 billion worth of gold that we haven't touched yet that we'll probably look at separately for underground mining or future open pits along strike.
Sure. Which mining method do you consider for the underground cutoff calculation at Goldboro?
Several. Because this is an anticlinal system, the dips change significantly from anywhere from horizontal to completely vertical. So it's a combination of long hole stoping, where we can use gravity. It's cut and fill where we can't, and sometimes it's a modified drift and fill.
What's happening at LSH? Is drilling finished? How many holes and when can we expect results?
Yeah, Lower Seal Harbor, we finished drilling. One of the issues we have is there's so much activity in Newfoundland that the labs are all kind of backed up, and there's one preferred customer that gets there first, and get their results first, and that's the Goldboro project. So the Lower Seal Harbor, sit behind that, and it's our own project that's getting in our way. However, there's competing priorities. So I think it's another few weeks before we get results back from Lower Seal Harbor.
Thank you. Give it to Stu for a bit.
Thanks for the presentation, guys. So Kevin, if you want to mute yourself. So you joined April 2019 and Rob a little bit before that. Given the project's had such a strong operating history, like how would you come in and approach, any cost savings or operational, improvements? I guess kind of explain to people how when you stepped into the shoes of the new CEO of an existing operation, what was your mindset to implement any changes you thought necessary to improve operations?
Yeah, when I looked at this, my history is included. I started with IM Gold in West Africa when it was a private company. I moved over there and we took it public. I was asked by a couple of individuals to find an asset for a company called Fox Point, a shell, and we negotiated the purchase of the Macassa Mine and Mill, and I moved up to Kirkland Lake and reopened that, changed that to Kirkland Lake Gold, and then I started my own company, Volta, and moved that forward till it was acquired by B2 Gold at a great accretion. And I just saw some assets at Anaconda that weren't being fully utilized, and there wasn't a significant aggressive growth strategy. So I thought, you know, that's the next one that could actually be quite a success. So we came in with the mindset of let's put together an aggressive growth plan with the existing assets that are there. And when we looked at the direction that Goldboro was going as an underground anticlinal system with a starter pit, and it started to become apparent that the mineralization expands into the host rock, we really made some changes. We changed the, we dismissed certain people, we changed the project manager, we actually got rid of the consultant that was working on the resource because the plunge direction was off and certain things were off. And it eventually got it turned around. It took months. I keep telling people it was like all these changes were like going to the dentist. It hurt like hell while it was happening, but boy, oh boy, it feels good now, and we can really smile with a glowing white smile. The project has really advanced, and we've converted, you know, something that was looking like a rather difficult underground mining scenario to something that's a very robust open pit scenario, just by the way we looked at the project and spent a lot of time on remodeling. I mean, one of the things that was wrong is the plunge direction was off by its actual plunge by 6 degrees. It doesn't sound like anything, but if you imagine being 6 degrees off on something like driving a car, you're going to crash into a pole. So, you know, you got to get the road straight. You got to get it right. When you figure that out, you can see the, you know, what's going on around you. In other words, our dilution model for underground mining became our ore model for open pit mining. Low-grade ore model, just by getting the plunge right in the direction right and seeing what the halo looked like around us. And it turned out to be, wow, there's an average of a gram of material that was going to be left behind by going underground because it was under the cutoff that falls into a very profitable open pit.
Most definitely. And then with the drilling now, you know, if you talk about the current, you know, 4,000 meter drill program, you just initiated at the Point Rouse.
Yeah, so we're drilling, you know, we're drilling the Stogger-type target, where I showed you the initial results, and we're infill drilling that. But the thing about the Stogger-type target is we would have never drilled that in a normal situation because it was a very low order IP anomaly, and there wasn't a surface expression, very much of a surface expression of gold in soils. But it happened to be the extension of something we mined in the past, and it was right beside the road, so we thought we would test it. And we got some of the best drilling we have received in the last 10 years of the results I showed you. And that opens up all the other low order IP targets along the scrape trend that don't have a very robust associated geochemical anomaly with it. And that's why we've just announced last week or a few days ago that we're drilling places like Pumbly Point and Intersection for targets that may extend the mine life at Point Roos. So that's what the 4,000 meters is for.
Gotcha.
To extend mine.
And then the difference, like at Tilt Cove, one of the announcements was talking about, you know, VMS system and Point Rouse anticlinal gold system, just how you're approaching, you know, the different geologies and like how would that work with processing and metallurgy?
Yeah, I mean, the anticlinal systems are in Nova Scotia, so that's a separate thing. The difference between Point Roos operating asset and Tilt Cove is not much, to be honest. What happens is along that belt, you have a very large previous producer of copper on the global scale from the late 1800s in the north end of that belt. And in the south end of the belt, you have another copper producer that was smaller. And then in the middle of it, you got the Nugget Pond gold mine. So you have all forms of mineralization. Some of it's VMS, but what we're looking for is more of the past producing Nugget Pond style of mineralization, which is these cross-cutting structures within the banded iron formation, whereby the mineralized fluids hit the banded iron, precipitate out the gold, and they convert magnetite into an iron oxide so that you get a low mag reading associated with the geochemical anomaly. And we look for those intersecting structures which create a sausage-shaped deposit at depth that was accessed via a ramp. We're looking for more of those higher grade gold deposits. We happen to hit Our first drill campaign down in the south near the old copper mine happened to hit both gold in the hanging wall and the copper gold VMS, which we announced. It's interesting, it's exciting, it's not something we pursue. We'll figure out a bit more about it and see what we want to do with it. But we're a gold producer, so maybe it's a spin-off opportunity later, or someone else joint venturing or something like that. But we're looking for specifically other Nugget Pond type deposits to put through the Point Bruce Mill.
Yeah, and then with this model of like having these high-grade satellite pits to feed the mill at Point Rouse, is there any additional permits required to do that?
Yes, they all need to be permitted from the point of mining, but not from the point of processing. So mining and waste stockpiles. So they're quite quick. We've permitted, as you saw on the map, 3 of them so far without issue, and we plan to keep doing so, adhering to all the environmental standards.
Gotcha. And then how far away are these kind of production targets?
All of them are within a 5-kilometer radius.
Yeah. All right, and then if you could make any comments on why some of those past producing mines stopped and what infrastructure is left near them.
So there's a mill left on the Nugget Pond mining concession. That concession, the small concession within our large land holding, is held by a company called Rambler. They are using it, the front end of it, to create copper concentrate from their mine that is actually close to our Point Bruce mine. Truck whole ore to the east to the mill at Nugget Pond, make a concentrate, truck that south, and put it on ships to go overseas. So that's currently being utilized. The front end of that mill is currently being utilized by Rambler. But our whole strategy is to truck ore back to our current mill that has the tailings capacity.
Makes sense. Thanks for that. I'll pass back to Campbell for some more. You're mute.
Fair to say that Goldboro could get you to 100,000 ounces a year. You're still looking at M&A for reaching your 150.
M&A's always been a component of our growth strategy. It always will be, but we don't do deals just to do deals. It has to be significantly accretive for us. It has to be with a willing partner, and it has to be in an area that's safe to work. We understand and we respect. We know that mineralization doesn't respect political boundaries, but we do. And we don't go anywhere unsafe or anywhere that's perceived not easy to work. Top shelf for us would be to get something nearby our operations, but we won't stop there until we find something in a good jurisdiction that's accretive to our shareholders. I must say, sorry, just to add to that, that part of our business is the part that slowed down the most because of COVID. Cannot do property visits, site visits, which are absolutely necessary when you're looking at acquiring, looking at things technically.
It would be accurate to say that all growth will come from open pit for now.
Yes, our feasibility study is I mean, it may have a small tail of underground, but we're not prepared to spend tens of millions of dollars drilling very deep holes for something that'll come into play in year 10 or 11 or 12 after the open pits. We'd rather do it when we have cash flow and possibly even a better drilling campaign from off of one of the pits with an exploration drift or something. There's no point spending the money now for 10 years from now. So we're focusing our money and our efforts on putting a feasibility study forward on measured and indicated resources that exist now. And there aren't many of those for underground. Those are mostly inferred.
Do you own the Tilt Cove exploration claims 100%?
Yes, we have options on them to own 100%. They are subject, in some cases, some of the prospecting deals we did are subject to NSRs, but they're all capped, and they're all capped at immaterial numbers. So it's if we like what we're seeing, we continue with the option, and we'll get we're able to earn 100% of all the properties. Yes.
Would you be done with the 45,000 meter infill drilling before the PEA?
The 45,000 I've been talking about is done, and that was done for this current resource upgrade. The 3,000 meter drilling is the infill drilling to convert the last little bit of inferred that's falling within the pits now, and that is supposed to be done for to be included in the PEA, but not absolutely necessary because you can use inferred in a PEA anyway.
You talk about sensitivity to the price of gold, and if it drifted, God forbid, under 1,500, 1,400, when would you be changing your plans? How flexible are you?
Well, where we're currently mining, which is Argyle, we can make significant money at $1,700 Canadian. So we did our reserves at 1,900, and we're currently selling gold at 2,100. So we can go down quite a bit, probably to 1350 US gold before we start to worry about a losing proposition. However, if you look at the project for Goldboro going forward, we won't know those types of answers till the PEA is out when we have the benefit of knowing what the capital cost will be and the operating costs. But suffice to say, with such a high grade, they should be quite robust.
How far away are your production targets to the past producing area is that Baie Verte mining district?
Well, there's in Baie Verte, we are the ones that started the Pine Cove Mine, where the mill is at right now, and that's the past producer. That was ours over the last 10 years, and we're just mining satellite pits now that are within 4 kilometers of that facility infrastructure, which is the only operating mill on the island. Gives us a distinct advantage.
What is Pine Cove's marginal stockpile? What gold price did you use for the reserve calculation of it? Cutoff looks 0.5 and grade is 0.55. What risks do we have there?
Yeah, well, the low grade stockpile is always put aside to be, from an NPV basis, to be mined at the end of the mine life, because you wouldn't defer anything higher grade until then. But after the end of the mine life, the cutoff grades change because you're no longer drill blasting or moving material. You are just processing the low grade stockpile. That's the idea. So the cutoff grade goes down below what it would be for a normal mining operation because you're only paying to rehandle it and process it. So the risks are the major risk is a change in gold price because it's marginal ore. That's why it's called the low grade marginal stockpile. So if gold goes up significantly, it's probably worth blending it with some of the other stuff, and if it goes down, it stays where it is. And at some point, when the mine life's over, which we don't anticipate, we want to keep finding more ore. But at some point, the decision will have to be made whether you put it through the mill or not, depending on the price of gold at that time and the cost structure at that time.
Okay, thanks.
Thanks for that. If you talk about, you mentioned Rambler, but if you talk about any neighbours in your area, and we're seeing an increase in M&A in Canada, some more Australians trying to buy their way in there. There's some St Barbara and Atlantic, Evolution, Red Lake, Evolution and Battle North. But yeah, if you could talk about any, given some of the really high grades you've been, intersecting, surely there are others looking in, around your project.
I think in both provinces there's a case for roll-up strategies of larger companies or even smaller companies combining. There always is that. But as I said earlier, our M&A strategy always includes a willing partner. Must include a willing partner. I think hostile takeovers, even if you win them, remain hostile environment and are difficult to work. So a willing partner with the right project that's accretive is going to happen over time. There are, and to answer your question specifically, there are not only Australians. I mean, there's companies from all over that are active in Newfoundland. There's a lot of money being invested in Newfoundland, and I think it's because of the reasons that happens around the world. When I went to West Africa in the early 90s, I was told only look at the Ashanti Belt in Ghana because that's the only place big deposits have been found. And my answer was, well, that's why I want to look elsewhere. The money hasn't been spent. There can't be just big deposits on one belt. So Newfoundland's kind of like that. It's kind of Newfoundland and Nova Scotia kind of lagged in exploration expenditure, even though it's got the right type of geology. I mean, it's really ripe for large deposits. And it wasn't until Atlantic Gold, really drilled off and put Tues into production that people understood that these things are very valuable. They're not just anticlinal systems that you have to try and mine, narrow, higher grade. They can actually be a robust, larger open pit operations that make quite a bit of money. I mean, Atlantic Gold proved that with Tues with a great production profile and cost system in their initial years. And St. Barbara realized that from Australia and paid over $700 million Canadian for that company. And after that, you see all these hundreds of millions of dollars coming in of exploration companies. I mean, there's one in particular that announced a 100,000 meter drill program. That ties up the labs, that ties up the geologists, that ties up the drills, and more people come in, and it gets harder to find these things, and then it gets more expensive. Supply and demand happens, but it's all good news because it's showing a lot of progress in the mineral industry in the east coast of Canada.
Yeah, and then I guess with that increased activity and COVID, has it been like, how is it for traveling in between those two provinces and/or getting staff across from Ontario or Quebec over, as you name them?
We're very fortunate to have a fantastic group of people involved in our exploration department that have adjusted and are staying in the places where their projects are instead of flying back and forth to their homes or their families. I can't say enough about the team that we have and the commitments they're making during this COVID. It's been fantastic. So that's how we handle it. People stay with their project and don't socialize. Have groceries delivered and just stay at their workplace for extended periods of time. And then we do have times where they do need to go home and have a break, and you do your 2 weeks quarantine then. But if we didn't have people agreeing to do what they're doing, we would have a real problem. So I could say it's gone way smoother than I thought. We haven't had any issues of COVID at our mine site, our producing mine site. We haven't lost a single day. In fact, I think we had our record year and made more money because there wasn't as much overhead and travel, and the team reacted in such a way that the mine kept running very, very well and generating revenue for us while our expenditures were down.
Yeah, that's great to hear. And just one last question from me for past Campbell, just if you could touch on the VMS intersections at Tilt Cove and what your plans are there. And
yeah, we have plans to just do some desktop studies on what we drilled and what it means in the area. We may or may not follow it up. We may follow it up if we see that there's still gold potential. But if it's VMS potential, we'll have to think of some other way to create value in that, because we're not a company that wishes to produce anything to do with concentrates. We're pouring gold bars, precious metal bars. That's all we want to do. But we will evaluate it and see what we can do with it. It could be a number of things. It could be a spin out. It could be a joint venture. It could be, there's a lot of interest in copper lately. So copper price is going up. So we'll do something with it that's accretive to us, but we won't advance it.
Thank you. Campbell?
What's the capacity of the mill? Could you process other sources of ore from partners? Is it possible to ship ore from Goldboro to the NL mill?
So the first answer is it's 1,300. It's rated for 1,300 tons a day. We've been averaging over the last few years 1,360. It's a flotation circuit with a tail end CIL. Therefore, we do have capacity to do some custom milling of concentrates should we need to. We have a 60,000 ton large ocean going vessel port that we built to ship some of our waste out as fill material in certain projects in the States because it's so benign and it's valuable, which means we can also bring large ships in should there ever be an opportunity whereby someone wants custom milling done of a concentrate where they can't permit somewhere in the world that's near a port. Because once you get it onto a ship, it doesn't really matter how far you take it. It's on and off that costs money. So we have opportunities for custom milling, ore from other companies around the world. We have the opportunity to custom mill ore from within the island should it be necessary. But the best bang for buck for us is milling our own ore, and our goal is to just keep that mill going and full with our own sources and keep exploring that. But there is opportunity should that not happen.
Almost done. Is there a history of any placer opportunities in the jurisdiction?
I don't know of any. I haven't heard of any, but that doesn't mean there isn't any. I'm not a geologist, and I also haven't looked into any placer opportunities. But it would be I would find it strange if there were, just because of the nature of the deposits. But could have been in the past at some point.
Are you ultimately satisfied with your share price value, your valuation, and your share price right now?
Well,
and then we'll kind of move that to segue into a close. So, how are we going to make money?
Nobody on here is going to say that they're happy with their share price. I don't think, to begin with. We've had quite a run, probably 400% in the last 12 months. But what we need to do is we need to look at our market cap, and our market cap is about 130 million Canadian. So just under 100 million US. We have 14 million in the bank. We have a producing mine that generates 20 million EBITDA project level. And we've got a project that has 2.7 million ounces in it, of which 1 million is mineable, and there'll be a feasibility study completed by the end of the year. And a PEA done in a couple of months that will start showing the potential value of it. And it amazes me that we're still where we are. A lot of people think, well, they've had a big run, therefore there's nothing left. I'll tell you, I am a large shareholder. I didn't start with any shares. I bought them all in the market along with everybody else, and I continue to do so because I believe that this is an optimal entry point for investors, including myself.
All right. Thank you very much. Thank you for all your questions that have been sent in. I'll be queuing you for feedback, and it will get to Kevin and Rob very soon. And good day, good night, everybody.
Thanks very much for this opportunity.
Excellent. Thanks a lot.
Thanks a lot.
Anaconda.